Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news of value declines everywhere you look. But first, American jobs growth rose at a solid clip in July and wages grew 2.1% after a surprise stall in June, both signs of an improving economy there. That opens the door wider to a Federal Reserve interest rate increase next month. Their unemployment rate is 5.8% and their participation rate is 62.6%. But despite meeting their expectations, markets seemed unimpressed. Even less impressive, but for better reasons, Chinese exports tumbled 8.3% in July, their biggest drop in 4 months and far worse than expected, reinforcing expectations that Beijing will be forced to roll out more stimulus. Chinese official reserves actually fell in July. But the latest inflation data from China shows prices rising 1.6%, their fastest rate in about 9 months. Going the other way, however, producer prices fell more than expected. Russia is reinforcing the ban on European food imports by destroying hundreds of tons of foodstuffs, including cheese, and this stuff has been smuggled into the country, especially in the Pacific East. Not everyone is happy, though, with more than 200,000 people signing a petition that this food should have been distributed to those who are suffering from the ban. In New York, the US Treasury 10-year yield benchmark slipped again on Friday and is now at 2.17%. US oil price fell on high petrol stocks in the US, now currently below $44 a barrel, and Brent crude is now below $49 a barrel. In fact, Brent crude is at a 5-month low. Commodity prices generally continue their fall, with the CRB index now at a 13-year low. And the gold price is staying down, now at $1,093 an ounce. Two big recent buyers, the central banks of Russia and China, have seen the value of their holdings drop by some large amounts recently. But if you really want to see a big local value drop, the market capitalisation of the big four Aussie banks fell by more than $30 billion last week as it became clear that their regulatory requirements for more capital is reducing the attractiveness of the high leverage play that bank stocks have become. New Zealand dollar starts the week with a somewhat surprising uptick at 66.2 US cents, 89.3 Aussie cents and 60.4 Euro cents. The TWI is now at 71. This is the highest the Kiwi has been in a week and a half. But it's not really due to local factors, more a reflection of weakness in other currencies. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.